let me remind you that we will be taking first the questions that the live audience of the event may have, and then we will proceed with the questions that we have already received through our webcast. I ask please the people that are here in the room to state the name and the question that they have. So let's begin. Please go ahead.
Hi, good morning. My name is David Hertzberg from Barclays. First of all, thank you very much, all of you, for the great presentation today and for hosting us. It was very helpful. I have two questions. The first is it possible to provide a bit more specificity around the cadence of CapEx from 2026 through 28? I know that you have a number per annum, but is it linear, is it upward sloping, or at least help us sort of understand how to think about that? And the second question has to do with a potential scenario in Venezuela with respect to perhaps a regime change or maybe not, but if we were to assume that production in Venezuela increases significantly, and by significantly maybe, the delta is maybe 1 million barrels a day over the next, I don't know, let's say 3 years. Could you talk about how that might affect GeoPark with respect to Vasconia discounts and other issues?
Thanks, David.
Thanks.
And I'll let Jaime take on the CapEx profile. And we broadly mentioned the 500 to 600 million bucks in the next few years. And I'll start with question number 2 in Venezuela. So again, lots of uncertainty in terms of what will happen with Venezuela. But I do know that the state condition of some of the infrastructure, the facilities, the fields, the wells, is not optimal. It's not where it needs to be in terms of actually being able to ramp up production quickly. They've come back to 850,000 barrels, roughly. I think that's where they are. And there eventually will be, again, in the scenario that you were talking about, which is having a change, dramatic political change in Venezuela. Should there be opportunity? And you see I'm mentioning opportunity. I'm not talking about only the downside and risk. But I think back to what Jaime was saying, we have flexibility in terms of where we put our barrels. Do we keep them in country? Do we send them out and export? And there may be opportunity in Venezuela as well. But I'll reinforce that we want to remain focused. We've divested some assets, Ecuador, Brazil. We're concentrating in Colombia, and now we're concentrating in Argentina. Jaime, do you want to talk about CapEx?
Yeah, absolutely. So David, let me share with you a little bit of color on the CapEx profile. So, underlying capital, it's activity, right? So what to expect on the two fronts? If you think about Colombia, the plan that Rodrigo mentioned is a plan that basically takes us from where we are today, which we're going to end the year in at about $110 million of CapEx, broadly. There's going to be an uptick on that capital intensity to probably 130, I'd say $140 million, Colombia, right? Why? Because we are reinitiating development drilling. We are doing a couple of exploration wells in next year. Those two things, and the water flooding, there's some CapEx associated to that. So basically, Colombia is going to go up, I'd say, a couple of years to that level of about $140 million, and then it's going to go down again, right? As those activities are not intensified anymore. When you think about Argentina is going to slowly ramp up. What we are anticipating is that Argentina will require next year about $60 to $70 million of CapEx in 2026, and then in 2027 is when you get the big ramp up. Obviously, that number is gonna depend on when the development drilling actually begins, right? If it begins in 4Q, which is kind of what we are assuming for the purposes of this conversation, the bulk is in 2027, and you're starting to see a number which is in about $240 to $250 million in 2027 and in 2028, right? Then it stabilizes down to about $220 million per annum, and that's ongoing, which is basically the capital deployment associated to keeping the rig going. So that's kind of roughly the shape of the curve.
Thanks.
Perfect. Do we have any other question? Go ahead.
Thank you. Good morning. Ann Milne from Bank of America Securities. I'm excited to see your evolution in Argentina, so good luck there.
Thanks.
Could you give us a little bit of a breakdown of what you expect, let's say, your steady state break even to be Argentina, Vaca Muerta, versus what you have in Colombia? And let's say 2 or 3 years from now, you are successful in Argentina, Vaca Muerta has a very lucrative returns, and it's much more profitable. Would you consider selling your Colombian operations, or if there is a change in regime going into non-conventional, which we're hearing is more of a possibility down the road in Colombia, which I know, Felipe, in the past you've been a strong promoter of? Thank you.
So good to see you, Anne. Good to see you again. So thanks for being here. And I'll let you talk about the break even. So there's a few things that probably we didn't mention that I think are relevant. One, we've streamlined, we've basically strengthened our operation in Colombia, and as I tell my guys in the field 2 weeks ago, as I was telling them, look, the reason we can pay the ticket in Vaca Muerta is because of what you do every day, and create cash and create something that has an operation that's profitable, it's reliable, and it's safe. And that's very good. So we see that going forward. And actually there's a lot of activity in terms of what Rodrigo was talking about, the legs. How do we view our water flood that has 30% coverage in the field to something that's different? How do we ensure that we can manage water differently and bring recovery factors up? So that's I think, the main focus. On the unconventionals in Colombia, I've been a big proponent and defendant of that. The current government doesn't like it, doesn't like oil and gas, period. And our view is that if we go to Argentina and we strengthen our competencies, we create much more experience. And again, Martin was saying the guys have in excess of 10 years experience on a personal basis. On unconventionals, I have some experience with the Permian as well. And we can bring that expertise back to Colombia, in the midterm. And the other thing you guys will know, but there's presidential elections next year in Colombia. First round in May, second round in June, and almost all, not all, but almost all of the candidates or pre-candidates are talking about fracking in Colombia. And the support, the latest poll, public poll, shows that support for unconventional development in Colombia has gone up. So I think there could be opportunity going forward, in that sense. Break-evens, Jaime?
Yeah, absolutely. Yeah, yes, and so basically the way to think about steady state break-evens is Colombia steady state break-evens are at $45 a barrel. Argentina steady state break-evens are at $55 a barrel. Right? That's considering a full capex deployment on a steady state level.
45 and 55.
Yes, 45 and 55.
Thanks.
Perfect. We have a question there.
Morning,
in the back.
guys. Eduardo Nieto from JP Morgan. Thanks for your time today. Just wanted to get your thoughts on the security situation in Colombia, if there's anything that you're seeing that the situation has deteriorated, if your forecasts assume worse conditions as we approach the elections, maybe a downside for your production or for costs. So how you think about that as you share your EBITDA projections and whatnot?
Sure, Eduardo, and thanks for being here. So in terms of security, something that we follow, we monitor, we're very closely working with the authorities, at a national level, regional level, and as you can imagine, it's something that we take very seriously. And when I was describing at the end why GeoPark, we've built very strong, very long-term relationships with the communities that are based on trust. And we track something which is very interesting, something that I had never seen in industry before, and it's a first for me, and GeoPark does it very well. As we track downtime in our operations, so Martin was talking about an ESP, a submersible pump that breaks. We have downtime or whatever. We also measure social downtime. What are the stoppages, blockages, security things that we have that could impact the operation? And those are very, very, very low, less than 0.5% in our operation. So we continue, or we believe we can continue to manage that going forward. But you're right, security overall in Colombia could deteriorate. We see some parts of the country not necessarily where we operate, but some parts of the country where security is not in good shape. So it's something that we will continue to monitor going forward. Thanks.
Felipe, if I may, I want to add, in Llanos 34, which is, like you're all aware, we have a very competitive advantage. Is we're connected to the national grid, we're connected to oil pipelines. So, and other assets, they're not. So when we do get a blockage, social unrest, we can keep on going for quite some time. And that's something that we have built over the years. We're doing similar activities for Llanos 123, but right now Llanos 123 is trucked. But on the main asset that we have, that gives us an advantage. And we learned the lesson. For those of you that follow us in 2024, we did miss part of our guidelines because the blockages were getting a lot harsher. So we have incorporated that now into our forecast. So we have, like Felipe was saying, not only downtime due to operations, pure operations, but we have incorporated downtime due to social.
Thanks, Martin.
Another question in the back of the room.
Hi, good morning. Francisco Barbosa from Jefferies, working with Alejandro de Michelis. Thank you very much for your presentation today. My question is on the Vaca Muerta assets. Could you please discuss how you see your costs evolving on drilling and completion, lifting, and transportation costs? Thank you.
Okay.
Want to go for that, Martin?
Yeah, Francisco, right? Yeah. So talk about OpEx. So we're getting in a block that, like Felipe was saying, the OpEx for 6 wells, trucking, the crude, it's out of specifications on salt. They are north of $25 per barrel. And our objective, and we have plans to take it to somewhere in the order of 6 to 7. And it's something that with fresh production connections to existing facilities, and then finally our own facilities, that's where we are planning to be. So that's from an OpEx perspective. When we think about the capital and the cost per well, we got a range which is from around $13 to $15.5 million per well. Obviously, we're going to be starting on the higher end of that, and in some cases, the pads are less wells, and in other cases are 5 wells, but that's kind of like a range so that you get an idea.
Do we have any other questions in the room? Okay, apparently not. So, but we have some 3 to 4 questions that have come through our webcast. So the first question comes from Josh Robertson from Peters & Co. And the question is, what is the production profile for Llanos 34 over the next 5 years? Is Polymer expected to keep production flat or just reduce the decline rates?
I'll take that one, yeah.
Yeah.
So thanks for the question, Josh, and Rodrigo, compliment if I miss anything. But like we were saying, in overall, Llanos 34, if you do nothing, is a field that declines at 23% or higher. And with the activity that we have been implementing and confirming that it works, we're arresting that decline. And we will share it again, but water flooding is clearly one. Doing workovers is the other one that it's clearly the second one. In 2025, the infill drilling program has given us a new one. And why we didn't drill infill wells before was we did not have as much insights and review of the geology itself. But even then, if we were going to drill the wells at $4.1 million, they were not economic. And now we've proven that we can drill those wells 30% cheaper. So it opens, in addition to water flooding and workovers, it opens that window of doing infill drilling. And on top of that comes the polymer. So with those things, we are declining at 14% this year, and we expect to be declining at around 11%, maybe less. Polymer is something that We know, we have some information from our partner in the south, but we have to see what the results are, and they need to be economic also, right? We need to make sure that we're not going to do it just to arrest the decline. Order of magnitude for the next 5 years, that polymer flood, when you add the capital and the cost of the polymer, again, order of magnitude is going to be around $15 to $20 million. Around 40% of that is the cost of the product itself. We feel that with with what we learn from doing a proper water flood, for those that are not familiar, if you're going to do polymer flood, you got to make sure that you do a good water flood. Otherwise, you're going to waste your money. So we got a good water flood in place. We are talking with our partner, which is the one that executing the polymer in the south. So, but how much of that is going to arrest the decline? I mean, I don't know if you want to add anything, Rodrigo, but we got an idea of what it could be. But again, it's we need to test it and pilot it.
Yes, I want to add something because the question is about the profile that we expect for the asset, and there is a combination of things. It's not just the polymer flood that we are applying there. We were talking about water flooding, new wells in the area. There are certain areas that have been developed in the next couple of years. So what we're expecting for this combination, a balanced development plan, is try to keep it stable for the next couple of years, at least 3 years, in the same level. Actually, we are doing some activities in the field during this year, and we learn a lot. So we are drilling new wells, very good results. We are doing workovers, good results. We are managing the water flooding in a very detailed way. So that's allow us to think that we can keep it stable with a certain level of investment for the next at least 3 years, and then start declining again. The polymer flood has a key role here. We started with a very conservative position in terms of projection because we have to test the technology. But according to the result that we are seeing from our partner in the south, so we are able to apply. We're going to start this year. Next year, we're going to finish the year between 7 and 9 patterns. And the idea is try to maximize the implementation of polymer flood. As Martin mentioned, polymer flood is something that is going to move forward, but in order to be success, you have to apply a very successful water flooding project at the very beginning. So we are in that page today, and we are doing our best effort to keep production stable for the next couple of years.
Thanks, Rodrigo. Thanks, Martin.
Perfect. So our next question comes from Matthew Woods at Fidelity, and the question is whether we will be suspending dividends.
So Matthew, thanks for the question, and I think that Jaime referred to that in his presentation, and we had a release that went out this morning, and we're going to be keeping our dividends at roughly $1.5 million per quarter for the next 4 quarters. So this quarter, 3Q, 4Q, 1Q, 2Q of next year, and then we will be suspending dividends. And obviously, there can be more information if you need more clarifications with our IR team that you will know, but that has been messaged today and informed to the markets. Thanks.
Perfect. The next question comes from Andrew DeLuca from T. Rowe. Jaime, you discussed the funding gap for the $1 billion CapEx program, roughly $300 to $400 million in new financing needed in the next 12 months. Can you discuss the different financing alternatives?
Yeah, so can I go ahead?
Yeah, go ahead.
All right. So
The floor is yours.
So thanks, Andrew. So financing, I'm happy to say that we have quite a toolkit, right? Because we put a lot of in that same mindset of be prepared for the uncertain. I think we moved from a place of the obvious answer to let's have multiple alternatives that allows us flexibility depending on how markets evolve. So I'm gonna take you a little bit through them because I want to make sure that we share that and you get that same sense that there's a toolkit in place. I think the first component when we think about financing this gap are actually the local markets in Argentina. That's been historically, I'd say, as we've approached, Vaca Muerta over the last 18 months, that's been our base case. And the reason why it's been our base case, it's because the macro in Argentina is still offering an attractive market for debt placement that is US dollar based, and particularly where oil and gas issuers are very well appreciated. And that was happening last year, and for a while there was a bit of a hiatus with the economics, moving in Argentina, and actually, over the last month, we saw it again, which is oil and gas companies are very successful placing debt in Argentina. We are prepared for that. We already have a standing authorization from the Comisión Nacional de Valores in Argentina to issue debt. We can issue debt up to $500 million or so. Not that we intend to do it, but the allotment, if you will, is already there. And it comes at very competitive tenors and cost of debt. We're looking at cost of debt that is actually more competitive than the one that we will get in international markets. So relatively, you're looking at, say, debt coming in at 7% type interest rates versus 9% or so. That is what you see in the international markets these days. So I'd say that, if you will, has been our base case, but it's one of many other options. And what are the other options? The other options are things like, for instance, oil prepayments. Oil prepayments have a role to play. We've used them in the past successfully in Colombia several times. In the recent past, last year, we had a big prepayment issued of around $300 million. We know the mechanism. It's extremely competitive in terms of commitment fees, cost of debt, flexibility. We can actually make them rotating. Last month, we actually created another one in Colombia for $50 million for the CPO-5 oil with BP. So we have a lot of experience on that, and it could play a role in this strategy. Why? Because it's immediate. It gives you lots of flexibility, around when to draw the line. So it's not so conditioned, if you will, to market windows, right? As issuing debt is. So I'd say that's kind of the point number two. I think the other component to add on prepayments is that there are a lot of synergies with the commercial strategy as well. You can actually capture a very good commercial discount if you do a deal with a prepayment facility associated. So that's another consideration. The third, I think, element of the toolkit, Andrew, that we have is credit lines that we have locally in Argentina. We already have approved credit lines for around $100 million in Argentina. They're all good to go and ready to be pulled with local banks there. That's something that we can use, if you will, as a working capital facility with shorter tenures, which is also good in the sense that the way that we look at the CapEx in Vaca Muerta is exactly that. It's actually working capital related. It's filling a free cash flow gap over a short period of time. That's, I'd say, it's the kind of the third component of the toolkit. And last but not least, there's always the alternative around the funding that you can have at a corporate level. It's not our base case, but it's an alternative where you tap in on international markets and you capitalize Argentina if required. I'm being very intentional about stating that this is all about Argentina because the plan in Colombia is fully self-funded and doesn't require any financing. So long answer, but I wanted to make sure that you had all the flavor around how we're thinking about the financing toolkit. Thanks.
Thanks, Jaime.
Thanks, Jaime.
Let's see if we maybe can squeeze a couple of questions more. So we have one here on Vaca Muerta, and the question is, do you see upside potential in Vaca Muerta landing zones, specifically in Puesto Silva Oeste?
I can take that. The upside that we are seeing there, we are familiar with the area because we have been working with Phoenix for 1 year, and we drilled Confluencia Sur, just next to Puesto Silva, and the result was very good at the very beginning. So there are a couple of expectations that could be an upside for the future because the rock there is more frackable, so more carbonate, more hard, and the result of the fracking effect is even better when it's flexible in other places. So could be some upside coming from that perspective, very technical, but it's something real. But at the same time, we are using 1.1 million barrels as a well type to estimate production. The reality in the area looks a little bit promising. So we prefer to be conservative at the very beginning. The quality of the rock is there, as I mentioned, the resources are there, and we expect to achieve at least the target that we have, but some upside is absolutely possible.
Thanks, Rodri.
Thank you. We have another question from Nazareno Delgado from FinFocus. The question is, you're projecting a significant increase in EBITDA and production between 2026 and 2030, largely driven by the expansion into Vaca Muerta. How confident are you that the Colombian base, especially Llanos 34 and CPO-5, can sustain stable production and free cash flow to fund that growth, particularly in a lower Brent price scenario?
Thanks, Nazareno. And I think there's a lot of considerations there. One, I was sharing with you earlier the work that we did at a technical level, very detailed, around our assets, understanding the subsurface in detail. And some of the things that we've done, we've advanced our 3D modeling, using new technology, including AI, and that's proving very helpful in terms of better landing our wells, understanding where we have optionality. So I think even though we've produced 200 million barrels, we're still learning from these fields, especially Llanos 34. We've been successful with 123 in terms of expanding production and creating more opportunity. And I think from an operational point of view, things like having 2 rigs running right now in the operation can help us in terms of sustaining that. So I'm quite confident that we can. And you saw if you remember the light gray that I showed in one of the slides, which was the do nothing case on decline. We've basically turned that around, and the good news, we're seeing that impacts already this year. From 23 to 14, we're maybe going to somewhere around the 9, 10 to 11 range and bring more fresh production. And the other thing was what Jaime was talking about when he took us through the hedging. 90% of our production is hedged today. 63% of our 2026 production is hedged. We will continue to look at opportunities in that space, but we have a floor of $65 per barrel next year. And we will continue to do that forward. We've been very successful, and I think that provides confidence that we can do investments that are profitable, that make sense, that return on the capital, and that can help us keep our base production in Colombia not only as flat as we can, but also generating value and generating cash. Thanks, Maria Cata.
Thanks, Felipe. We have another question from Emery Pexon from Impera Capital. Thank you very much for the presentation. My question is regarding the potential on unconventional fields in Colombia. If the government's approach to oil and gas changes following the elections next year, how should we think of the potential contribution of unconventional fields in Colombia to GeoPark? It would be great to have more color on that. Thank you.
Thanks, and we could spend another hour here, and I'm very conscious on time, but there's a lot of potential in Colombia. There's at least 7 or 8 basins that have been identified for unconventionals. Not only La Luna, but there's some other formations as well. Colombia right now has a 15 to 20% deficit on the gas production. That's going to grow to probably 30% deficit by next year. Colombia is importing gas, which is more expensive. The quickest way to solve that issue would be through developing the unconventionals, doing fracking, just underneath some of the existing infrastructure. But as you well mentioned, current government has said no to that. Most of the candidates that are in the race have said that they're willing to consider unconventionals. And I think that would be the easiest thing in terms of Colombia turning that page and basically regaining control of energy security and energy sovereignty. And on the oil front, production in Colombia has been going down, in most of the large fields. And I think there's also a lot of opportunity in terms of oil. So again, we're having a foot in Vaca Muerta provides us the opportunity to leverage on that expertise when the time comes. But you know, we're very agile in terms of assessing opportunities. We have our radar basically turning around and looking at opportunities. But I'll just reinforce, without losing focus. You know, we will remain very focused on the investments that we do, but I agree with you, there could be an opportunity going forward with unconventionals in country. We'll cross that bridge when we get there. Thanks.
Okay. Nicolas Novoa is asking, what are GeoPark's outlook and plans for investment and growth in Ecuador?
So I think, and Jaime was talking about this, we've divested our position in Ecuador. We're in the process of finalizing that and handing that operation over to Gran Tierra, who's the buyer. And we will remain focused in Colombia and Argentina. For the time being, there's no plans in Ecuador, and we want to be very focused. You know, we had a presence as a company in many different countries. We've scaled back in terms of the number of countries, but I think we've provided a more profitable and sort of exciting portfolio going forward in terms of the opportunity it provides.
Good. And the last question comes from Jose Romero from BlackRock. Felipe, many of our investors have followed GeoPark for years. What message would you like to leave with them today about the company's future and why now is the right moment to be confident in GeoPark?
Thanks, Jose, and thanks for the question. I mean, one thing, and I'll share with you why I joined GeoPark. You know, so I had other opportunities, I had other things I was considering back then, but when they knocked on my door, I said, GeoPark is a company that I've respected for a very long time in terms of how they operate, how they conduct their business, safe, ethical, reliable, compliant, and profitable. And the way in which they actually deal with the relationship with communities and the environment. It's a company that I've always admired. And I think it has the opportunity to significantly grow. When I think of a company that can, as I said, deliver on the promises we've made, and the next 3 to 4 years, double its size in terms of value, generate cash, increase production, and then on top of that, we can see the vision. That's why I joined the company, you know, and we streamlined, you know, it was tough, very quickly, reorganization, 25% of the people were let go, we're being more efficient, we're again, going back to the gym, you know, and getting fit again. And the other thing is, we're delivering on our promises. I shared with you the dates on the closing of Vaca Muerta, and some of you guys have reported and say, wow, this is very quick. You know, 2 months between the day that you signed, 21 days between the day that you signed and the day that you closed, paid for the assets, and took the operation or took over the operation. So that's what we want to do going forward. I think we're presenting today to you here at the New York Stock Exchange a vision that's appealing, that's compelling in terms of building on our strengths, a lot of the good things we've done in the past, and moving forward very responsibly, very disciplined to growth. You know, and that's what we want to offer. And I'll repeat this, and we want to ensure that we deliver on our promises. You know, I know there's been a lot of things in the past. We're not using any rear view mirrors here, but we're saying, going forward, this is what we're trying, or we're sharing with you, and this is what we want to do. So I'll tell you guys, and thanks for the question, we're a company that has a simple twofold strategy that's based on not promises, but realities of the assets that we have and the positions that we have more recently in Vaca Muerta. So thanks for the question.
Thank you, Felipe, and thank you all again for the interest in GeoPark and for being here with us today. You will find the presentation that we shared today posted on our corporate website. And we will always be there to answer any follow-up questions that you may have. Feel free to reach out and have a wonderful rest of the day. Thank you, everyone.
Thanks, Maria Cata. Thanks for everyone.
Thank you.
Reach out my hand, tell you to run. Nobody say, nobody young.